All right, welcome back to my channel. Let's talk about crypto. It's been a wild ride, right? An absolute roller coaster. We just saw this absolutely brutal crash. And today, we're going to break it all down. We're going to figure out what really happened, see what the on-chain data is telling us, and maybe, just maybe, figure out what's coming next. So, where did it all begin? Well, it started with this just insane number, $20 billion. That's how much borrowed money, leverage was piled up, all betting that the market was a one-way street. Straight up. And then poof, in a flash, it was all gone, wiped out. Look, this wasn't just a red day on the charts. This was a historic event. The biggest flush of leverage ever. In just one day, the market got shaken to its absolute core. All those billions gone. And the feeling in the market, it went from extreme, we're all going to be rich greed, to sheer gut-wrenching panic. Just like that. So, yeah, let's get into it. All right. So, here's the game plan. First, we'll dig into the crash itself. Then, we'll ask, was this actually a good thing, a healthy reset? We'll look at the data. We'll also tackle the big question, are the old 4-year crypto cycles dead? After that, we'll check out the bull case for a big rally and wrap up with exactly what you should be watching for. Okay, Section 1, the $20 billion crash. It's all about when confidence just evaporated. So let's rewind a bit. Let's set the scene. Just a few weeks ago, the market was pure euphoria, right? It really felt like nothing could go wrong. Look at this. Bitcoin was trading way up there. Confidence was through the roof. And as we now know, leverage was everywhere. You couldn't escape it. All the talk on social media was about the super cycle. This idea that, this time was different, that the market would just keep climbing. No major dips allowed. And then boom, in a single day, it all came crashing down. The music just stopped. It was this incredibly fast, violent swing from greed straight into fear. Prices just nosed. Panic was spreading like wildfire. And of course, the headlines started screaming, the bull market is over. It's finished. But was it really? So that leads us to our next question. Was this a healthy reset, or was it the end of the line? It's all about finding the signal in all that noise. Because, if you can tune out the screaming headlines for a second and actually look at the data, a very different story starts to take shape. So you basically have two competing stories, right? On one hand, you've got the end of the bull market narrative. A total catastrophe. Welcome to the next crypto winter. But on the other hand, you have the mid-cycle reset idea that this was just a really, really violent flush of all the excess, clearing the deck for the next big move up. And honestly, the data, it's pointing pretty hard toward that second option. And here's the evidence. First off, Bitcoin stabilized right near its 20-week moving average. That's a classic bull market support level. Ethereum and Solana, they held their key technical levels too. And this is huge. The big money, the institutional ETFs, they kept buying. Their inflows stayed positive right through the sell-off. They bought the dip. And of course, all that crazy leverage totally gone, wiped clean. You could argue the market is way healthier now than it was before all this. Okay, so the fact that the market held up so well after a hit like that brings up an even bigger conversation. It's about breaking the 4-year cycle. Are the old rules we've lived by for a decade now totally obsolete? You see, for more than 10 years, Bitcoin has followed this pretty predictable beat, this 4-year rhythm. It's all tied to the housing, right? That moment when a new supply of coins gets chopped in half. The hing kicks off a new cycle. Then you get this big expansion phase. Then comes the mania, the market peak, and after that, a long, painful bear market. It's been simple, predictable, and it's worked until now, maybe. So, that's the big question. What if the old rules just don't apply anymore? Because this time around, things just feel different. They aren't following the old script. There are a bunch of new factors at play that make this cycle look fundamentally different from every single one that came before. And here's the main reason why the new paradigm is institutional demand. This is a total game changer. Think about it. Past cycles, it was all of us retail speculators driving the price. But now it's the big guys. It's institutions. It's corporations buying their ETFs and for their treasuries. These ETFs are just vacuuming up insane amounts of Bitcoin, pulling it off the market and creating this massive persistent supply shortage. And you know what's funny? Breaking the cycle might be the most bullish thing that could possibly happen. I know it sounds weird, but a longer, more drawn-out cycle, one that doesn't just blow its top in a year and a half, well, that could build a much stronger foundation for much higher prices down the road as all this institutional money steadily flows in. All right, so if the market's been reset and the old cycle is breaking, what's next? What's the case for a big rally? Well, there's some pretty big macro tailwinds, and some of the smartest people on Wall Street are getting very, very bullish. Take Tom Lee, for example. He's a Wall Street veteran who's been on this for years. He says, and I quote, "It's good to see an all-time high because this is confirmation. I think there's still room for upside into year-end." Basically, he thinks this price action isn't weakness at all. It's a confirmation of strength. Holding these levels is a very, very good sign. And his price targets, yeah, they're not small. He's looking at a potential $250,000 for Bitcoin by the end of the year. And he's not forgetting about Ethereum. He sees that potentially hitting $12,000. That's a huge move from here. So why is he so bullish? Well, he sees a perfect storm brewing. You got the Fed signaling they're going to start easing up, lowering rates. That means more liquidity in the system. We're heading into Q4, which is historically the best time of year for markets. And where is all this money going to go into scarce assets like Bitcoin and Ethereum? All while that institutional demand just keeps on growing. It's a powerful mix. So, what should we be watching for now? What's the path to recovery look like? Well, the good news is now that the panic is over, we're seeing some really clear signs that the market has shifted from loud panic selling to quiet accumulation. Check this out. Bitcoin has found a stable range. The amount of BTC and ETH sitting on exchanges is at the lowest level in years. That means people aren't looking to sell. They're pulling their coins into cold storage for the long haul. The on-chain data shows long-term holders are buying, not selling. And even in the regular stock market, you're seeing risk appetite start to come back. These are all signs of quiet accumulation, of conviction, not fear. And this fits the classic recovery sequence perfectly. Step 1, Bitcoin finds support and chops around for a bit. Check. Step 2, global liquidity starts to pick back up. We're seeing signs of that now. And step 3, that capital starts flowing back into altcoins, usually led by the strong projects like Solana, which is exactly what's starting to happen. So, is the market just resetting for its next big expansion? I mean, when you really step back and look at the whole picture, when you ignore the scary headlines and just follow the data, it really looks that way. It looks like this wasn't the end. It was violent, yeah, but a necessary reset. It washed out all the greed, all the leverage, and it might have just cleared the path for a really powerful move higher. Don't forget to subscribe, and thanks for watching.